Okay, now I'm recording. So let me recap it one more time. When I woke up, I saw US30. I saw this order block on the 1 hour. All right. I saw it tap into this order block right here. It sold off. And when I woke up, it was here, I believe. And I saw it tap back into the order block. I saw it sell off. When it sold off, it leaves this order block. You know, just like this was an order block that it left, but price never came back to tap in. So I just put a box around the order block and I waited. Well, this candle came back up. It tapped into the order block. Once price was in here, I put a sell stop right here at the bottom of the order block. And it picked me up when it sold down. I just sold it down to this first equal low, right? Then price went back up, so I got back in for the sell again, and my take profit was 3334. It had taken me out. Man, it looks like this is going to give me exactly what I wanted, which is another bearish order block. So it's still selling basically. But once it creates this new order block, I mean, there are two or three ways you can put it. You can put a sell stop right down here. So when it sells back down, it takes you in. This would be my next take profit right here at 34360. Or you can, a lot of people when they're in the indices, they trade levels, and it's not based off of. I need to move this bar up here. It's not based off of a 1 hour chart. Maybe you'll do 5 minutes or 15 minutes. That gives you plenty other levels. So if you drop down to the 15, you see this order block on the 15? It tapped in. You can put your sell stop right here. So when it falls, it takes you with it. And you get your take profits from your levels on this side. So that's still the next level. Right here. So if I was taking this trade right now, this is what my trade would look like. That's how my trade would look. If you didn't want to cover so much ground, you can cover the top wick of this candle. It's totally up to you how you would trade it. This is a 3-to-1. Most people, when they trade an indice, will probably be decent with a 1-to-1. You know, you can also put a take profit right here at this first equal low if you wanted to partial out. So this could be your first take profit. Maybe it bounces and goes back up and then comes down to your final take profit. Whenever I got in, I held mine until the bottom over here because it was pretty straightforward to me. Now, what I did though was I moved my trail down once price made this pullback and came down. I moved my stop loss to this low right here. So if it had came back up and tapped me out, then you know I would have just been tapped out. So let's talk about people looking for the Zoom. There are people in there looking for the Zoom? Oh, you gave it to them. All right, cool. Let's talk about order blocks on regular pairs, okay? I think a lot of people are confused when it comes to, I guess, getting any trade, all right? I don't trade indices every day. I only trade indices when I see an easy move, okay? I don't have time for the heart palpitations and all that stuff. Can we talk about your alarm battery? Yeah, I know. Trust me, it's not my alarm battery, Bella. I'm in Lubbock, Texas, and I'm at my two younger brothers' crib, and they don't believe in the beat. They don't believe in changing their alarm batteries. I even told them about it. Maybe I just need to go to Walmart and grab some.
You're telling me
What's that?
they don't believe in battery?
They don't believe in getting. I've already brought it to their attention. It's crazy.
Jeez, let me talk to them. This is
It's
annoying.
it's two of them too. I mean they too old for it, but it is what it is, man. Like if they like it, I love it. So on a regular trade, right? What I like to do is I'll pick a pair and I'll go from a higher time frame. Um, the trade that I took this week, I actually took two of them. Okay, I like to use Oanda charts. I don't like to use any other charts. I want the same consistency when I look at these charts. So what I want to do is go frame my trade. Okay, when I say frame my trade, I want to find out where the order blocks are on the higher time frames. That way, I know the area that I can expect for my trade to take place. So if I'm on a higher time frame, this is to me clearly a bearish order block, right? That's on the monthly. My bullish order block on a monthly, for all intents and purposes, would be way down here. I'm not even going to mark that up. When I go down to the weekly, I can get a more clearly defined order block right here. This is the bottom of the market. And here's the top of the market on the weekly. This is a weekly order block. If you notice, my trade will happen between these two order blocks. So when I was looking at this pair this week, I had none of this. This is what it looked like at the beginning of the week. It just given me a bearish order block, right? This looks exactly like the US30 did on that 1 hour trade, right? So my expectations were that when the week started, we get a push up into the order block, and then we get a sell down, and it would eventually get to this order block. I never worry about how long it takes to trade, right? I know the trade is going to happen, but I can't control how long the trade takes. I'm a swing trader, so sometimes it's going to happen fast, and sometimes it's just going to take its time. And let me give you an example of what I'm talking about right on this side. So this week, right here, is another bearish order block, right? So let me zoom in so you guys can see. So for all intents and purposes, the wicks are part of the candle. But when I trade, I don't trade with the wicks, okay? I mean, I keep them in mind, but I don't actually trade with the wicks. So when I frame my order block, I frame it from body, right? From the body of this green candle over. So this week, it wouldn't have tapped me in. But this next week, it would have came back, it would have tapped me into the trade, and it would have immediately fell down, right? So I would have made a lot of money over there. I wouldn't have made any money this week. I would have missed the trade. But this next week, it would have came right in, tapped me in, and I would have gotten paid this week, this week, this week, this week, right? So since I trade a prop account, I can't hold my trades over the weekend. But it's easy for me to get in and out of these trades. And most of the time, if I take a trade on the weekly, I can hold it that entire week, right? So these are easy moves that pay pretty big profits. So let me take you back to this trade this week. So I just framed the trade up just like this. I waited. For those of you who know me for a little bit, you know I have a strategy that I use for weekly retracements. Every week, if I get a candle, a pretty good sized candle that runs a couple hundred pips, I'm going to automatically trade the retracement of that candle because every candle retraces. The market is fractal. So this is a 363 pip move last week. Yeah, I caught this move last week, but that's not what we're talking about. This is a 363 pip move last week. So I can expect that this is going to retrace, right? It's already started retracing. If you see this wick, that means that the candle is retracing. It's also confluence that the price is going to push back into my order block, and I can take me a sell trade out of here. So all I do is grab my Fibonacci. I measure the move of this candle. All right, the retracement is going to take me back into my order block. My point of emphasis, or my POI, is going to be my golden zone. Now, if this was a just a regular retracement move and it wasn't an order block, then I would frame my trade. I would look to enter this trade at my golden zone, right? And this is what my short would look like. But because this is an order block, I can't trust that this trade is going to retrace all the way to my golden zone. There's the reasons behind that. If you understand what an order block is, it's massive amounts of money. You know, this is where institutions have conducted the bulk of their business. So it's all kinds of liquidity in here. So in order for the market to move from this order block to this order block, it only needs to push up into this order block far enough to get enough liquidity to push the market down. We don't know how much that is. I mean, this is a big weekly candle. Could be trillions of dollars. Well, it probably is trillions of dollars within this order block. So in order to be safe, right? In order not to be greedy, I just want to make sure I'm in this trade, because once it starts pushing down, as you'll see later, there's all sorts of opportunity to get in on re-entries, you know, or you can add additional entries. So my thought process at the beginning of the week was, hey man, just buy this trade up first, you know, buy it first, and then when it tails off and starts falling, then you know, get into the trade. Since I don't have a job, you know, it doesn't really matter what time this happens. You know, I can set my alarm or whatever. So I figured this was about a 110 pip move. Even if I didn't get the entire 110 pips, I could still ride it, you know, somewhere up here and then sell it down. And since I don't really use stop losses until after the trade starts, I don't really worry about a pip count. I can dictate my lot size by using a buy stop, you know, a hedge trade. I can use a buy stop wherever I want to. So if I want a bigger lot size, if I only want to cover a 20 pip stop loss, you would have a 20 pip stop loss. I would just put a buy stop 20 pips above wherever my entry is going to be. But because I'm buying this up, I don't really have to worry about that, because this is called a hedge trade. I'm just buying it up. It'll give me plenty of, I can be in a buy and then I can sell it anywhere in here. As long as I sell it with equal lot size, or maybe I can even double the lot size. And if it goes up a little bit, then maybe I need to look at adding an additional hedge, but I can double the lot size to sell it because we know the price is going down. So I don't want you to get caught up or confused, you know, as far as me doubling the lot size. So I just want you to watch how this trade moves when the market opens. I'm going to go down to the 4-hour chart. So this is Sunday when the market opens. You can't, what in the weekend? Okay, Maria, I don't understand your question. Say that again. You can't what in the weekend?
You were saying that you need to close out on the weekend because of your prop firm.
So yeah, if you trade a prop firm, most prop firms won't allow you to hold your trade over the weekend. Now, the FTMO just came out with this new swing trader account, which is cool now. But I traded FTMO originally. That was my first prop firm, and they only paid me 70%, and they didn't have this swing trader account. So I left their ass alone, and I got a My Forex fund account, and I got a the prop trading account. And neither one of those.
What am I gonna say? If I see a physical,
Was that? Neither one of those guys allow you to hold a trade over the weekend. So every Friday I have to close out of any trades that I'm in going into the weekend, which is fine. I figured out a way to make it work for me. That's all you have to do. Once you understand the rules, you have to kind of detail a plan that works for you. And okay, you have to detail a plan that works for you. So the plan that worked for me was to find a trade that starts off on Sunday, based on the weekly order block, and to get into that trade on Sunday, and I can, I can make all kinds of money. All right. So let me explain this order block one more time for the people in the back. I'm gonna go back to this weekly chart. Okay. This order block is, you see this up candle, right? This is the last up candle in this move. And then you have a candle that engulfs it, right? It breaks structure to the downside. What do I mean by break structure? The body of this green candle is structure. This red candle breaks structure to the downside, which means this is a bearish order block. Okay. Now you can watch 1,000 different videos on order blocks, and depending on who you watch, they're going to tell you that this is an order block. It is, but for the way I trade and the way I will show you how to trade, I don't use this. Okay. Order blocks are just like stop losses or any other thing in trading. Indicators. You can use a Fibonacci 1,000 different ways, and they're all correct. But where you get your wins are through your consistency. So if this is your initial introduction to order blocks, only look for order blocks where you have an up move and you have a break of structure to the downside, or you have a down move and a break of structure to the upside. Y'all understand that? So the only order blocks that we're concerned with is if we have a down move and a break of structure to the upside, it broke the structure right here. Or if we have an up move and a break of structure to the downside. Okay. Now, because you are new to order blocks, you're not going to understand everything about it, right? You just have to trust what I'm telling you. All right. Trust what I'm telling you and then go back test what I'm telling you. Okay. No trading system is perfect. But what I can tell you is if you go back test what I'm showing you now, especially on this weekly chart, you're gonna probably win like 8 out of every 9 trades, man. Like it's ridiculous. The success rate on these things is ridiculous. But you just have to have the discipline to only take your trades at your order blocks and only take your trades when it wicks you in, right? That's very important. If you try to, guess, or you try to jump in the trade after the fact, it's going to roll up on you and you're going to lose money. Okay. And your psychology needs to be intact. Okay. This is an order block, man. I've had a lot of people tell me, well, Todd, man, how can you take a trade right here, your entry right here? You got to protect the entire order block. You're not going to make any money. And I'll post every week where I made $5,000, man. And every week, like some weeks is 10,000. And I don't know about you, but I had a job that was paying me $138K I was a operations manager with Union Pacific Railroad, and I didn't make five grand a week. I made 10 grand a month. And I was getting taxed out the yang, you know, in California, making that 10 grand a month. So don't worry about the size that you have. Don't worry about the area that you have to protect. That's not the important thing. There are 1,000 ways around that. The important thing is recognize your trade setup. Get your behind in the trade. That's what you do. As this trade cooks off, you're going to have a million opportunities to get bigger lot sizes if that's what you're looking for. You know, I think people are caught up on the lot size, and that's not what you should worry about, man. You have to fall in love with the process. The money is a byproduct of you understanding the process, right? So let me say that again. For those of you who are worried about lot sizes or pip counts, that's not what you should worry about, right? The thing that you should worry about is recognizing your trade setup. Once you start recognizing your trade setup, your lot sizes and your pip count, they're going to come just because you recognize the trade setup. It's kind of like going to the gym. If you go to the gym, you know, you don't worry about how big you're going to get or how, you know, how big your legs or whatever you're working on. You don't worry about that. That's going to be a byproduct of you actually showing up and putting in the work. So if you recognize the trade setup, then the pip counts are going to follow. Sometimes you're going to get big pip counts, sometimes they're smaller, but it doesn't matter because you won't lose a lot of trades. So again, does everybody understand? Drop a 2 in the chat if you don't understand the order block still. You got this up move, there's a down move that breaks structure to the downside. And for those of you who are caught up and saying, hey, Todd, man, this is not structure, it's a candle. This is a weekly candle. If we drop down, and trust me, this is structure. Okay, so everybody understands that. All right, let's drop back down to this 4-hour chart because this is exactly the setup that I saw on Sunday, right? So we're going to watch this trade. Now, mind you, I want to buy this trade up as far as it will go. I want to try to get 100 pips out of this trade, and then I want to sell it. So let me stop it right here. You see how the trade comes and taps your order block? Now, there would be nothing wrong if you got in the trade right here, right? And if you didn't get in the trade right here, now you're going to be sweating when the trade pulls away, right? This is what we call FOMO. So for those of you who have said, man, I'll just wait until the trade gets here, because this is what a couple of people did to me this weekend, right? They said, man, I'm not gonna buy it up. I'm not gonna do that hedge thing, Todd, because that confuses me. And I say, hey man, you know, suit yourself. You know, either way, just make sure you get in the trade at the order block. So trade comes and taps the order block. You're either in or you're not. If you set your trade up, you're automatically going to be in this trade. For those who didn't do it, they were waiting for price to come up here. Why were they waiting for price to come up here? Because they say, hey, Todd, man, if I get in price right here, I got to protect this whole order block. And, you know, I'm not going to make any money. And I tried to explain to them that's not how it works. But they wanted to get in right here. So the market taps in. All right. It falls away. What do? They hopped in the trade for the sell right here. They hop in the trade for the sell. They immediately go into drawdown, right? Now I get all the phone calls or the messages like, oh, Todd, man, I'm in drawdown. And I'm like, look, man, you have to make a decision and you have to stand by your decision. If you get in the trade right here, right? That's cool. Protect the entire order block. This trade is going to win by the end of the week, right? So now that everybody is cool, you know, the trade didn't tap into the order block like we thought it was going to tap in. But it allowed us to get into the trade right here. So I know these don't look like big dips in the trade, but this move right here happened, I want to say yesterday. So this is yesterday. So the day before yesterday, Wednesday, we had people in big time profit, right? That doesn't look like a lot of profit, but I think I was up 2K off these 81 pips. Then it retraces all the way back almost to entry, right? So the people who had messed with a stop loss got kicked out the trade, right? And then the trade comes back and gives you another order block, right? Then the trade cooks off. This, after this order block, this is now when you move your stop loss from here to here. Does everybody understand that?
What day is that? On Wednesday?
This would have happened February 15th, so Valentine's Day. Yeah, it would have been the day after Valentine's Day, the 16th, yesterday.
Oh, my birthday.
Yeah, yesterday was a day that you could have moved your stop loss down, right? Now, I've been doing this so long that I haven't even moved my stop loss, right? I didn't have a stop loss when this trade started. I had a buy stop. My buy stop is right here, and it's still right here. These weekly order blocks will be respected probably 90% of the time. I haven't seen very many get ran through. I'm not saying it doesn't happen, but like there has to be some significant event that causes a weekly or a monthly order block to get ran through. Like the war can cause it to get ran through, right? But for the most part, nothing is going to happen. As a matter of fact, this green candle happened because of news. What did Australia? They had some PMI numbers or something. What did the AUD have? This employment. Y'all see this employment change? This employment change was positive news. Where on the order block did I start my sell? I started my sell at I will go back and show you. I started my sell when it tapped in. So when the market started, I bought it right here. When it hit my order block, I already had a sell limit, in place, right? So it went up a little bit. My sell limit was triggered. And when it came back out, I just had to cut off my buy, right? So I only made something like, I don't know, 34 bucks or something like that on the buy. It didn't go very far into the order block, but I was in the trade as soon as it hits the order block. I don't play about a weekly trade setup. The number one rule is to get in the trade, right? If you try to be greedy and wait until the trade comes up here, if you are a waiter, you didn't get into the trade, right? So you have to understand the number one goal is to recognize your setup. This is your setup. That red line is your entry. I don't care whatever else you're thinking. This red line is your entry, and that's what you need to be focused on. You got to get into the trade. So I made sure I got into the trade. The trade cooked off. We got the news. A lot of people, can you make an order block from scratch? Just for an example of how to make it. All right, let me see if I can do this order block. So if this is my order block, right? I need to see, does anybody know how to change the color on this right here? Settings, color. Come on, man. Double click. Oh, that's the border. Okay, let me, I got it now. Okay, this is a bearish candle, right? I wish I can get these closer together. Let me see if I can get these a little closer together. Okay. You have a green candle and a red candle that's next to it that breaks structure to the downside.
And when you say break structure, you mean that it just engulfs it, correct?
Yeah, but I don't want you to say engulf.
Oh, okay.
I want you to use my terminology because
Okay.
it's not engulfing it. It's breaking structure.
Okay.
This is a very important concept, all right? Because this is a bearish order block. It's bearish, which means it's selling because it breaks structure to the bottom side. Now, the reason why you guys keep saying engulfing, because you're looking at a candle, and what you're not understanding is this is more than a candle, right? This is on a daily time frame. If we drop down a time frame, this is not going to be one candle. If we drop down to the 15-minute time frame, you're gonna see the structure is broken. Like you're gonna see that you actually see structure in here, right? And then you see the market just fall. It retests, falls again. This is structure. So if you guys were trading retail, y'all would make it look like this, right?
Right. Yeah. Yeah.
That's your order block. There's your tap into the order block. There's your cook off.
Oh, okay. I see. Okay.
So I need y'all to dump the garbage that you've been pumped. That's garbage. So when you trade, the way I'm trying to help you see this market, we're trading order blocks. We're not trading that structure garbage. All right. I mean, structure is important. Don't get me wrong. But if you learn to look at it differently, then you'll learn to be able to make money off of it more easily, right? Because you'll see your order block, and then all you're waiting for is this tapping, right? So the order block is this is this green candle sandwiched in between two red candles, right? The red candles break. This red candle breaks structure to the bottom side. You understand that this is your order block. This is your tap in, right? Now, I don't want to confuse anybody, so I'll just leave it alone. We'll talk about price action a little bit later, right? And when I say later, probably not this section, not this session, because it's kind of piling on, it's going to give you an influx of information. But if you understand how price moves, right? Price moves, we have to look at 3 candles to understand how price is moving, right? We can't look at 1 candle or 2 candles. There has to be a 3 candle series to understand if we have healthy price action or unhealthy price action. And healthy price action means that there are no imbalances, right? Does everybody know what an imbalance is? If you don't know what an imbalance is, drop a 2 in the chat. Because the entire market moves on order blocks and imbalances, okay? So let's talk about an imbalance, Ty. And for those of you who are not sure about this information, let me go through here. You can go to YouTube and learn anything you want to know. So if you go on YouTube and you type in imbalance, smart money, you're gonna get 1,000 videos. This guy tracks FX. I like tracks, you know. I think he explains it pretty well. Savannah explains it pretty well. You can get past her damn cockiness. Smart Money Concepts, or her channel is Smart Money Academy. Now, if you look at order blocks and imbalances, this is where you want to focus your trades on, right? And we're going to talk about what an imbalance is very briefly, okay? And in my opinion, imbalances are more important when you trade the indices than they are when you trade pairs, okay? Now the market does trade to imbalances when you trade pairs, but it's still going to go to the next order block, right? So I don't focus on imbalances when I mark up my charts and whatnot. So let's talk about what an imbalance is, okay? So if you let's look at these last 3 candles. So when you look at candles, they tell you everything you need to know about price and how price is moving or the status of this pair or whatnot. So when you look at these last 3 candles, this first candle, we'll take this first green candle, price opened down here, right? First price pushed down, it made this the wick, and then price pushed back up. It pushed way up here off the news, and then it came and closed down right here. Price opened on this red candle, it pushed up, right? Then it pushed down, very little wick at the bottom. Then this third candle opened. This third candle pushed back up. Then it pushed down, and then it closed back up here. I need everybody to understand it. If you understand this price action, you will understand how you can get into your trades. Because this whole candle is your order block. This green candle is your order block. Now, I told you back when we first started, I don't really use the wicks, all right? I use the bodies for my entry, all right? But I'm cognizant of the fact that this whole candle is the actual order block, right? So if I'm looking for an entry, a second entry or whatever into a trade, I'm gonna make sure that I look at my entry at the bottom of this wick, because I understand that if we have healthy price action, when this candle opens up and comes back up here, it might just go to the wick, right? To the bottom wick of this order block. And it could tap me into that order block, and then it could cook off. Does everybody understand that? So if you have price action that goes from this wick and you can go across to the next wick, there is no imbalance. That's called healthy price action, right? That's healthy price action, and that's what you like to see as a trader, right? But sometimes in the market, you have a news event or you have something that causes the market to expand rapidly, right? And you get these big long candles, right? And when you get these big long candles, a lot of the time, I'm going to delete our order blocks, guys. I'm going to delete this so we can see what an imbalance looks like. So I'm going to delete the rest of this stuff. Okay, we're going to look at these last 3 candles right here. So something happened in the market and the market exploded to the upside, right? And when the market exploded to the upside, you see this candle opened here, it pushed down, then it pushed up, and it closed right here. The market, the next candle opened, it pushed down just a hair, and then it shot way up here. And it closed right here. This next candle opened up. It should push all the way down to the top of this wick for healthy price action, right? Everybody understand that? Come on, look, come on, Junior. I'm on a Zoom call. So, so price should push down to this wick. It doesn't push down to the wick. So this entire area from this wick down to this wick is what we call an imbalance, right? Sometimes if you're on YouTube, you'll hear it called an imbalance, a fair market, a value gap, or you know, a fair value gap. So whoever put kinda that they understand, what don't you understand?
Oh, now I get it now. What you explaining now? I'm saying in the beginning when you were explaining, you said drop a 2. I was like kinda, but okay, now I'm getting it.
I knew that if I just had a little bit more to say, then maybe you guys would kind of pick up. Let me put my background back normal. Okay, so this area, this entire area is an imbalance, right? From this candle wick up here, we need that when this candle opens up, we need to push down at least to cover this wick, right? That would close this imbalance right here, right? So let's see what this next candle gives us. Dang near to this imbalance, right? So you see how that works? If you understand price action, right? Not trade setup, just price action. If you understand price action, you would have expected for this candle to open up and push down. Now, you may not have known that it was going to push all the way down because this is a pretty long candle, but you would have had a pretty good idea that this price was going to push down. So if you had just measured this candle and put your golden zone here, right? If you had just did this, then technically, you could have traded a retracement down to this level and it would have paid you just based off your understanding of price action, right? And the only reason I bring this up to you guys is because on a weekly candle, I do this. I absolutely trade like this on a weekly candle. If I see a long weekly candle, the people who know me know that that's what I call an easy money trade that sets up every damn week, right? So I don't do this on a daily. Like when I first started trading, I used to trade retracing, but I don't do this on the daily now because I've matured as a trader. But on the weekly, I absolutely do it. What do you mean it's better to trade on the bear? Please explain that, Lemish. So you mean as a trader, you recognize the bearish trades better. I can accept that, or I can understand that. So maybe you recognize bearish setups more than you recognize bullish setups. Is that what you're saying, Misha? Okay, awesome, awesome. When you're trading, that's exactly what happens. So you need a go-to, like as a trader, as a new trader, you just need one. You need to be a one-trick pony at first, right? You don't need to be. You don't need to be inundated with every trading style, with every trade setup. You need one thing that works for you 90% of the time, right? And as a new trader, I listened to this guy named Oliver Velez, and in one of his videos, he was like, look, a retracement is going to hit the 25%. A candle is going to retrace 25%. It's going to retrace 25%, 90% of the time. What does that mean? That means if you have this candle and you just trade the retracement of this one candle to the 23% line, if you pull out your Fibonacci and you measure this candle, this first level, this first line right here is your 23% line, right? So imagine this. If you just trade from here to here, you're going to win 90%. Your win rate is 90%. Just trading from here to here. Does everybody understand that? I know you don't believe me. I get it.
Yes.
But I guarantee you, man, I guarantee you, if you get your ass on that weekly chart, and I'm sorry for cursing, I get passionate about this. If you get on this weekly chart and you test what I just showed you, I don't care what candle, you can go any random spot on the chart and you can kill this thing on any random spot and you just do retracements on this weekly, you know.
He ain't lying.
If you just do retracements on this weekly, I guarantee you, you're going to eat. I guarantee you. Because this stuff works. Yes, it's recorded. And if you back test what I just showed you on this one weekly candle, right? I like using long candles, but that's me. What I'm telling you to do is get you one thing that works for you. And I gave you one thing that'll make you a 90% trader. And that's the trade, that retracement to the 23% line. Yes, Ty, just doing retracements is totally different than order blocks. It's totally different because every candle is going to retrace, right? Okay, I said every candle, but let me take that back because some candles may not retrace. And here's what I mean by some candles may not retrace. I'm sure we can go through here. We can find a couple of candles that aren't going to retrace. No, I don't see. Trust me that there are some in there that don't do it, but every one of these candles, here's one. This is what I mean by every candle. There is a retracement, but I'm not sure that this is the 23% retracement. But we'll measure it. This does retrace. That is 23%. So this candle moved from here, from this wick up here. If you adjust the opening the next week, like on Sunday, if you just said, okay, I'm going to sell and my take profit is going to be at this 23% line. You got paid. No, the wind probably did it. You got paid right here. So trust me, there are some candles that aren't going to make it, but I'm telling you now, I'm not telling you, I'm not making this shit up. 90% of these candles are going to retrace to this level. You know, that's how I quit my job. Okay. It's going to get boring, you know. I hate winning. I want to win more, you know. I know y'all don't think it's gonna get boring, but I'm gonna tell you what makes it boring. All right, because you're gonna win. You're gonna win your couple $100 or however much you're winning, right? And you're gonna be winning at 90% clip, but you're gonna be looking at Will making $10,000 in a day. Are you gonna look at me when I post a $7,000 week, or somebody else who's been doing this longer than you? And you're gonna start comparing your money to their money, which you should never do, but you're gonna do it anyway, right? But I just gave you, everybody on this damn call, I gave you a guaranteed way to be a 90% trader, right? So that's just trading the weekly retracement every week. Guarantee you can pass any challenge. You can do, with all your dreams can be accomplished through that one move. All right, that's being a one-trick pony. And some people will never have to learn anything else. Some people will take just this and they'll make all the money they need to make. It's possible. Trust me, I know. But order blocks, right? Order blocks is what's going to take you to the next level as a trader, right? Order blocks is going to help you identify your trade. Yeah, I'm going to draw it up right here, Ty. It's going to help you identify your trade and pick your entry. Ty, did you see this order block right here? I need to hear from you, Ty, because I need to make sure you understand this. How come you didn't recognize this as an order block? Here's your order block. The next candle taps you in. If you can recognize this as an order block, Ty, you're gonna make a lot of money, bro. Because you're not just gonna be trading retracements. You're gonna see your setups too. So if you saw this setup this week, you can trade this setup and you can go trade another candle on just a retracement. Like this candle right here might just be a retracement. And this one might not have paid you. I'm trying to. Good, Randy. Let me see if this candle would have paid us, y'all. Then we got our first loser. So see how this doesn't retrace? This would have been a loser. Because this trade didn't retrace when it came up. This candle opened up and it pushed up. So this retracement would have lost. This would have been your first loser. It took me a while, but I know that there are some that don't retrace, but it's very few. Maybe this one doesn't too, this entire move. But if you look at this, this is an order block right here. See this order block? This order block did not tap you into the trade, right? Did you see this order block down here, Ty? So this order block didn't tap you in, but price comes right back and taps into this order block. And I know you're saying, hey man, the wick came out the bottom side. The order block is actually to the bottom wick of this red candle. I don't use them when I do my trades, right? My sell stop would have been right here. So this trade would have triggered my sell stop. So I would have been in the trade for a buy and a sell at the same time. It would have triggered my sell stop. It would have wicked you guys out of the trade. And then the trade would have went my direction. All I would have had to do was start cutting off my sell stop, right? And now I'm in profit. And now it takes me up to this order block and I got paid, right? So this trade would have taken 1, 2, 3 weeks to pay out, right? Of course, I would have gotten out of this trade at the end of the week. I would have re-entered the trade when it tapped back into the order block. I would have exited the trade up here because I can't hold this trade. I can't hold this trade over the weekend. Then you sell the.
I got a question.
All right, go ahead.
When you said you would have tapped back into the trade you would have gotten back in the trade when it tapped you back in, you talking about the original tap in from the beginning of the week?
So there is no original tap in. But you have your order blocks marked. You have your order block marked. This trade never taps you in, right? It just goes. It creates a bearish order block here. So now you have the top of your market, the bottom of your market. Once it creates this bearish order block, it taps you in. It takes you right down here. Boom, into this. You take profit here, and now you're back in the trade for a buy, right? You got to get out the trade right here because this is the end of the week. Well, what do? You plot the retracement, you sell it, because you would have saw this as an order block too. Your price action would have told you, hey man, all it has to do is sell to this level. So you would have caught this sell, you'd have got that tap in, you'd have took profit on the sell, then you'd have taken profit again on this when the trade brought you back up to the top. It just doesn't stop, man. Like, there's no way as a retail trader that I could have caught all these moves because I didn't understand, first of all, how price was moving. And second of all, why the hell was it going there, right? This tells you everything, everything.
So, you know, on the Wyckoff phase, you know, on Wednesday, price can often tap back into where the order block was.
Back up, back up, back up. What do you mean Wyckoff on Wednesdays?
Well, when I was trying to study the Wyckoff phase, I was noticing that, you know, Sunday, Monday, and possibly Tuesday, the retracement can happen. And then you take profit, like, well, this is what happened. And I'm trying to figure out how to do it better. I took profit, and then on Wednesday, because I knew the market was continuously going to go in the same direction, in the up direction, I tried to find
Can I slow you down?
the entry. Yeah.
What trade are you? This would be a better conversation if we could actually see the trade. Do you know what pair you were in?
It was Euro odd, actually. It was Euro odd,
Was it
actually.
this week?
Yeah. It was last week.
So you traded this with me last week. You traded this retracement, basically. So let's talk about that. I think last week we talked about just trading this retracement. So let's be fair to everybody. I told everybody about this strategy. I'm gonna have to redo this. So what happened was, TT, you were on a call that we talked about this retracement strategy, correct?
Yes, and I got back in at the wrong time.
All right, so let's talk about what happened. So first of all, last week, this is actually what my thought process was, right? So I figured that we were going to get a pullback on this candle and the market would push into this order block, then it would turn around and come back down, all right? Now I figured we can get a move from here, either down to this order block, but more importantly, I thought it would it would push into this order block, right? Now, this market is moving up, right? So all I wanted to do was measure this candle And I was just going to take a hedge trade from here to here. And that was like 150 pips, huh, TT?
Yes, it was at least, it was a lot. It was,
So 170 pips. It was a 170 pip move. We had like 4 or 5 of these marked up, right? Like EA, EC. It was all the Euro pairs had did great this week. So we anticipated that we can, I don't know, it was like 5 or 6 pairs we had marked up. But what happened was the price actually reversed. It created a bearish order block. And I think what you're talking about is the Judas swing, TT.
right.
So you guys are gonna have to do some research on these terms, right? The Judas swing, Judas as in the guy who betrayed Jesus. The Judas swing is a technique that the market makers use. You know, maybe it's put into an algorithm. I'm not sure, but it happens, you know, where they make the market look like it's going one direction, and then they reverse the market, and they take it to an opposite direction, right? That's correct, Ty. That's correct on the bullish order block. So the Judas swing, though, is they'll make the market look like it's going one direction, and then they'll reverse it, and they'll take the market from, they're trapping you in your position. So as this market is going down, you know, maybe they reverse right here and it make you think the market is going up. So they trap the people who are shorting and they pull their stop losses. Then people jump in for the long, and then they pull the sheets and they go south again. This doesn't look like a big move, but if you drop down in your time frames, the moves are more dramatic. And a lot of times they will happen, you know, while you're sleeping. It'll make you think one thing, and then they'll hit you with something different.
I believe this happened on Wednesday.
Yes, hang on. Let me see what Ty is saying. So will there be times when the market never comes back to your order block? Yeah, of course. It'll be all those times. So this is probably what you're talking about, TG. We tap in. You think that the market is getting out of here, right? You think that you get your rejection. You tap in, you get your rejection. You think that the market is buying up. That was the bias. And then all of a sudden, whoop, they
But why
pull the
don't you
sheet.
think that with its market structure, it's already on a downtrend?
I can't hear you. Repeat what you just said. I think somebody was saying that it's on a downtrend, and that person would be correct. All right. But
Oh, that was me.
who said that? That was you, TT?
No, it's me, Barbara. I'm sorry.
Okay, yeah. So you're exactly correct, Barbara. But you got to understand that when these moves happen, because you have a predetermined bias, you're not really paying attention, right? So if you're a retail trader and you get this W down here, this double bottom, and the market takes off, you're not thinking that, hey man, it needs to break structure first. Or it passes here, you're like, man, it broke structure. It broke this support, right? Okay, I'll show you order blocks in a minute. I just want to talk about how to not get caught up. It broke these lows, right? But what it didn't do was break this high.
Right.
This high, this is your telltale sign. If this had broke this high,
Right.
came back and touched, then yeah, we'd have went to the upside, right? But it didn't. It stopped short. This is just what some people would call a complex pullback or a pullback on a different time frame. You know, like on the 15-minute, it looks like you broke structure, but maybe on the 30-minute or the 1 hour, it doesn't even look close, right? It's just a complex pullback. So it just depends on where you're looking in the market. And a lot of times we as traders are stuck on our biased time frames. And that's what gets people killed that only look at the 4-hour time frame, or that only look at the 2-hour time frame, or they only look at the 1 hour time frame and below. I understand you might be a scalper. I understand you might be a day trader, but it's imperative that you look at the higher time frames to understand the overall move of the market, right? I even thought that this was going to go higher, right? So I didn't get hurt because I sold it. This was my take profit. It hit my take profit. I think I did get in for the buy, right? But when I got in for the buy and the market pulled back, I was up and I caught it. You know, I didn't make any money. You know, it was negligible, whatever I made, but I got out of the trade. I didn't keep trading it down though. I didn't keep trading this down. I was already in another pair that was moving. So what I like to do is, or what works for me is to trade what's on the weekly time frame. So if this was a weekly order block, then I'm going to trade this tap in and sell. I'm only looking for a retracement trade on the pairs that aren't at an order block. Does that make sense? Two different things. There's a concept way that I trade. I trade off concept. This is a concept. All right. The order block is a concept that I trade. A strategy that I do is a retracement on a weekly candle. That's a strategy. So I only wanted to trade this as a strategy, right? And I think maybe TT, you might have got caught up trying to take this further. Like this hit your take profit. So I don't know, like anything else that you got after this was a bonus. So I don't know what you did as far as is getting caught up in that bounce maybe. But if you stick to your take profit, you won't lose these, right?
Right. Yes, I did. I hit take profit. It was wonderful, but then
You got back.
I couldn't figure out.
So you got in for the buy.
Right. I couldn't figure in, but I got in the buy where price was, we thinking it was going to continue to sell up, and
Well,
it was
I understand
wrong.
that,
I was wrong.
Oh, okay, but let's talk about that. Let's talk about that.
Mm-hmm.
You got into the buy. Why?
I got into the buy with a couple of reasons. I was being greedy, but also
No, let's talk about. Let's
the
talk about.
weekly.
Okay, but let's talk about even the weekly. All we have is a bullish candle.
Yeah.
We said that we was going to trade this retracement and hit our take profit. What gets you into the buy? I know I jumped into the buy, but what got you into the buy?
The order block.
Where? That's what I wanted to hear. What order block?
Yeah.
What order block?
Yeah, original order block.
No.
I mean, I'm sorry, it's not original.
I need to see
So
on what time frame?
well,
PT ain't no damn order block. That's what time frame?
I was on the weekly. That's why.
This order block.
I didn't go down.
1 hour. Listen, if you're on the weekly, you
Yeah.
didn't have an order block. You didn't have an order block. This is what we had. Does everybody understand what I'm saying? We didn't have any order block.
So what I did wrong, which I don't want anyone else to do, is go like where the retracement, where you got in on Sunday, where
This
we
is
got
where
in on Sunday.
We said we're going to sell it to here. In order to get in for a buy, you need to get an order block. There has to be an order block for you to take a buy trade. I know where my order block was on the 15-minute time frame. But if you get on a 15-minute order block, then where can you take that trade? You can take it to the next 15-minute order block. You can't take it to a weekly order block
Incorrect.
to a 15-minute time frame.
Mhm.
Does that
So
make
nobody
sense?
nobody else make that mistake, please. Just because it was buying doesn't mean that I should get in, because that's where they get you. You not the order block didn't form on the net. Like I didn't see another order. I just assumed that because I knew from my analysis it was going to buy, that it was going
Right.
to take me.
That's exactly what happened. We all, I did too. We all took that trade based on our analysis, and that was not the right thing to do. We were predetermined that this was going to bounce and buy, and the market makers gave us exactly what we wanted to see, and then it took our money. You know what I'm saying? And I didn't lose money, but it's a trade that I know better than to take. These are bearish order blocks. Then the market bounces. Now on the 15-minute time frame, you would have gotten a bullish order block. So Misha, you should never take a trade on the 15-minute time frame. Well, not this year, right? There will come a time in your trading career that you'll be able to drop down and take a trade on this 15-minute. But you're not at that level, and that's going to get you beat up, right? Because if you take this bullish order block on the 15-minute time frame and it taps you in right here and it goes up, you go to sleep and then they take your money, right? So no, don't take a trade on the 15-minute order block. It's not going to end well. You have to understand. Yeah, you have to understand market structure before you start doing that. Ty, everybody, the market moves on order blocks and imbalances. I don't care what you trade in. You can trade options. You can trade Google stock. You can trade pork bellies. You can trade anything and everything. Order blocks and imbalances. That's what it is. It's the same. The thing with the indices, though, is you're not going to be able to take a trade on a weekly time frame, weekly order block. Well, not until you have a $400,000 account or something crazy, right? Because your account won't be able to hold that kind of a stop loss. So there's a simple way to do it, like I kind of demonstrated for you guys when we first joined this chat on the US30, right? You identify it on a lower time frame, like this 1 hour, right? I identified the setup on the 1 hour time frame. That's an order block. It tapped right in. I just waited right here. I had a sell stop because I knew whenever it took me down, it was just going to sink, right? I knew that my take profit was going to be over here. I didn't care about this middle level. My take profit was right here. I knew the market was falling here. So this setup was highly advantageous for me as a trader, right? Because I knew that I could get to this level. I still feel like the market is going to come down to this level, but that's another topic. But I knew I could get this level, and I got that level right on the money. So Misha, I don't want, as a beginner, right? This is important, guys. As a beginner, I don't want y'all taking order block trades lower than the daily, man. Like, I'd rather you guys swing these trades because you can see the market better from the higher time frame, right? And like, I know the seasoned people, they rarely look at the weekly chart. So I got it. I understand how that feels to somebody who's been trading for a while. But as a newer person, if you take these from the weekly, like I do on a Sunday order block trade, you don't have to get out of. Like, you get into that trade, and at the end of the week, you're gonna have money. You're gonna be in the blue, right? Depending on whatever your lot size is. Even if you just have that one position, it's going to finish in the blue. So those are easy trade setups. What I do with my son is every day when the market closes, like at the end of every day, me and him come across here, we identify order blocks at the end of the day. And we will mark these trades up, right? We'll expect for this candle to come up and punch us in, and then take us down the next day. Sometimes it does. In this case, it wouldn't have. Now, I know this is US30. I would never try to trade like this on the US30. But if this was a regular pair, if this is CAD JPY, and we saw this order block, we would put a sell stop right here. He put his stop loss because he doesn't hedge trade. I hedge trade, so I don't use a stop loss. I can put my sell stop here. Or if I want to use a bigger lot size, I'll put my sell stop 25 pips away or whatever. It doesn't matter. I just want to make sure I get into this trade because it's going to sell down to the area that I expect. So I think you guys are saying that the swing trading works better for your schedule. Now, look, I've shown so many people this trading strategy, and so many people, I've shown them this concept. Where does the bottom of the box go again? I've shown so many people this concept, and they'll use it partially, but they can't hold their trade. So I'm gonna tell you now, if you can't hold your trade, don't expect to make the money. You know, like my son's mother, she trades on here, and she took profit 2 days ago. She took profit on the EA trade for like $19. And I'm like, well, what was your stop loss, man? Her risk for that trade was $100. She has a $10,000 account, a demo account. And I'm like, so you risk $100 and you profited $19. I mean, that's like your son taking $100, you know, risking $100 of your money for $4, man. That, it doesn't make any sense for $19. You wouldn't do it with real money. Why are you doing it in your trading account? Like, don't do that. Hold your trades, man. Like, trust your analysis. Where does the bottom of the box go? Let's talk about that. When you're framing an order block. All right, if this is a bearish order block, everybody agrees that this is a bearish order block, right? The green candle and the red candle that break structure to the bottom, to the downside. All right, that's a bearish order block. So the green candle is a focus when you're talking about a bearish order block. The bottom of the candle is where the bottom of the box goes. The top of the candle is where the top of the box goes. Y'all got that? Does that make sense?
Yes.
Okay, we've talked about a lot of things. All right, we've talked about bearish order blocks. We've talked about bullish order blocks. We've talked about price action. We've talked about retracement. All right, we talked about a strategy, which is trading retracements, pulling a Fibonacci out, measuring the pullback of the weekly candle, and trading it to the 23% line will make you a 90% accurate trader. You'll win 90% of those trades. That is a strategy. Okay? That is a strategy. A concept is trading order blocks and understanding where your imbalances are. That is a concept. There's a difference. A strategy you use like to make guaranteed money. A concept is something that you look for on your charts, right? If you can identify your order blocks on charts, then you'll always be able to find good trade setups, right? So if you would identify this is an order block, it would have tapped you in, it would have sold down here, you could have taken your profit, it would have tapped you back in, you can take the trade to equal lows, you could have taken your profit here. Don't be greedy and try to get all the way down here, because that's a pipe dream, right? unless you understand the market. But always take what the market gives you. Don't be greedy. If you understand your concepts, which are your order blocks, you'll always see how you can take advantage of the market. You can always see your trade setup. So if you do these order blocks and you depend on the very next candle to tap you in, you'll be wildly successful. Wildly successful. Sometimes it's going to tap you in. Sometimes it's not going to tap you in. But if it doesn't tap you in, who cares? You missed the trade, go on to the next. The order block at the top, you didn't put the box at the bottom of the green candle. You mean right here? This order block at the top, this would be where I put my box. I think I had it further down, you know, maybe I wasn't zoomed in, or maybe I just wanted to show you that the wick is actually, sometimes that's where you get your tap in. It doesn't matter. If you just use the body of the candle and don't worry about the wicks, you're gonna miss some trades, but you'll be wildly successful still. There is the Smart Money Academy girl, Savannah. She only uses the 50% mark. She only takes trades if it goes 50%. She's wildly successful. So I want you to understand the concept that I'm giving you, or that I'm trying to show you guys. The concept is frame your order block. Try to get tapped in on that next candle. If you don't get tapped in, so what? Live to trade another day. You're not going to lose any money, I guarantee you. Right? When you do get tapped in, it's on and popping, you're going to make your money. Right? So if you frame this order block, you get tapped in the next candle, you make a lot of money. If you live in that, with those truths, you're going to be wildly successful. There's no way that you will be able to post red numbers in a week's time. I guarantee you. I guarantee you that. If you just trade the concept and then that strategy, there's no way you'll have a losing week. I don't give a darn. You're not going to lose. You won't post a red week. Okay. Does anybody have any questions?
Yes.
Who has questions? I has a question. Ty, you say this is not a good one. You said this is not a good order block, Ty?
Yeah.
Is this the one you're talking about?
No, come back.
Ty? Okay, it is not a good order block. It's a great order block. It's not a good order block. It's a great order block because it tapped me right in and I got paid. Why would you think it's not a good order block? Okay, that's a great order block. Anybody else have any questions?
Yeah, so after trading the retracements, say on after whatever day that is, on a Wednesday or Thursday, whatever, the next step could be to look at the daily and look at to see what order block may be available if you want to try to trade for that, you know,
I'm sorry,
for that day.
Can you repeat that question?
Yeah, so if you want to trade on the daily, like towards the end of the week, if you have like an account like where you cannot trade on the weekend, it's best to trade like a daily or on the daily chart,
Okay,
and to see what order blocks you can find.
So what do you mean you have an account where you can't trade on a funded account?
Yeah.
I can't trade on the weekend.
Right.
So-
So I'm saying, yes.
So, no, this is what I do. I want to find a trade that's at a weekly order block, right? This week, there were 2 trades that had a weekly order block. You know what 2 they were? I know you kind of started the week out pouting, TT, so maybe you wasn't following the market.
Oh, JPY.
Which one? This is one of them. This is one of the trades that I took at the beginning of the week.
Oh,
This is another trade that I took at the beginning of the week.
Mm-hmm. So I know you're talking about at the beginning of the week, but I'm talking about like during the middle of the week, like on a
So,
Wednesday or Thursday.
okay, so if you aren't in a trade at the beginning of the week, which I highly recommend that you find your trade at the beginning of the week, you can catch a trade any day, right? By using the daily charts, right? The daily charts. See how it has an order block right here? It taps in. This, I don't know what's going on with EU, but I really thought that it would push up. Maybe it will over the next 2 days. But we'll see. Anyhow, you can go to the daily charts on any given day, and you might have an entry. So let's look at EJ.
Okay, I think you missed the question.
This pair is on crack. And it's on crack because of the war situation. So it was going to sell down, then it was going to buy up, now it's going to sell down. Why is it moving like this? Because of the war news. The war news is going to make this thing be retarded. So if you watched my Zoom this weekend, I told you that the JPY pairs are going to be heavily influenced by what's going on with the Russia, right? So to me, unless you're scalping this, you don't want to make your living in JPY this week or while the news is going on about Russia. Now, if they go ahead and invade and they go ahead and start fighting, then yeah, you can sell this and this is going to cook off. You're going to make a lot of money. But if one day they withdrawing troops and the next day they building troops up and the next day they withdrawing troops, this is what you're going to see. It's going to give you indigestion. So did that answer your question, TT?
Okay, so I think let me rephrase the question. At the beginning of the week, when we're looking at our weekly, and we see, for instance, a bullish order block.
Right.
We're trading the retracement. Say we're trading the retracement for that.
For this right here.
And
so we want to trade it down.
Yeah.
Okay.
So we trade it and then after however long the retracement is done, right?
Right.
Now, say it's Tuesday or Wednesday that pair is beginning to push up. We go down to the daily, find the bullish order block, and present our hedge trade to bring us into that trade. Is that correct?
Yeah.
Or how do we finish trading that?
I personally prefer the 8-hour chart. I mean, all of y'all probably don't have 8-hour charts. If you don't have the pro account, you might not have an 8-hour chart. But yeah,
I do.
Do you have it? So the 8-hour chart or the daily will give you an entry. You know, to me, the 8-hour is just as good as the daily, and it lets you get into the trade earlier than the daily does.
oh, I didn't know that.
Oh, I see what you're saying. That's good. Okay, thank you.
All right. So Ty, the news doesn't mess your order blocks up, but the news will push a trade in a certain direction. So you have to understand how things work fundamentally. It's kind of like you asking me if gas will mess your car up, right? If your car is on E, it's gonna run out of gas, like it won't be able to go. The gas is what allows your engine to work properly. So the news is the gas to these pairs, all right? Because if you were a rich person and you had $15 million, you're not going to put it in a bank. You're going to invest your money that's going to give you some, you're going to put it in places that's going to pay you interest on your $15 million. You can't take it down to Bank of America and earn that 0.2% or whatever they're giving you. You're going to put it in something that's going to give you, a bigger return. So that's the same thing that these banks, like maybe the Fed, the Federal Reserve Bank, or the European Central Bank, or the Great British, Central Bank, they have billions of dollars that they need to put into the market or put into places that's going to earn them money. So does Barclays and all these other hedge fund managers. They got to find investments that pay them well. Well, currencies is an investment that will pay well. So if you have somebody who's heavily invested in the euro, right, and there's a war that breaks out in Ukraine, you want to take your money out of the euro and put it into the Japanese yen, because the Japanese yen is not going to be affected negatively by that war. The euro is, and the Great British pound is. So if you have $5 trillion invested in the Great Britain pound, and they tell you that Putin is going to invade Ukraine, you don't want to lose your $5 million or $5 trillion. You want to take your $5 trillion and put that into this JPY, because it's not going to be affected by that war. So understanding the fundamentals allows you to be a better trader, right? Like, I don't have to call you and say, hey, Ty, stop selling or stop buying stop buying EJ. Putin just attacked Ukraine. I don't have to call and tell you that. You already know. Once you see that news feed, if you're buying EJ, you're going to automatically hit sell EJ, and you're going to close your buy position, because you know the EJ is going to tank. You know that all the JPY pairs are going to tank, right? I put something in the news yesterday. Did y'all see that? Let me pull up this news folder. All right. Did y'all read this right here? This Evergrande crisis?
Oh, okay, yeah.
Are y'all familiar with Evergrande?
No, I'm not.
Okay.
No.
So Evergrande is it's the largest real estate company in the world. Every hedge fund manager has a position, has money invested in Evergrande. So if Evergrande is going to be a problem, then you need to be prepared to sell JPY anyway, right? Who trades JPY pairs? Have you guys traded JPY pairs?
Sometimes.
Y'all don't understand the power of JPY, do you?
No.
I'm gonna show y'all real fast. This is January last year. So from January last year, from January to May, you get an 850 pip move. From May to September, you get a 600 pip move. From September to October, you get another 500 pip move. From October to December, you get a 600 pip move. And from December to last week, you get another 600 pip move. So if that Evergrande news is true, like if Evergrande is in trouble, you're going to get another 600 pip move to the downside. If that war happens, you might get it, you know, I mean, this thing might push all the way down here to this purple area, man. And some pairs move more than others in the JPY. So your AUD, you might get more dramatic swings than your EJ. Or your NZD, you might get more dramatic swings than that, right? You just have to understand and look at how dramatic your swings are in these pairs. But these things will pay you handsomely if you understand how the news affects them. Anytime you have uncertainty, coronavirus, war, the crumbling of this Chinese real estate giant, you're going to get a sell-off of these JPY pairs, right? And anytime they come to a conclusion, they'll buy up, right? This big move right here was because the NZD raised their interest rate. I mean, I expected this thing to keep pushing up, to be honest. Like this thing should be way up here by now. But because of the Evergrande and the Corona, the Omicron, and now the war, is not pushing up, it's pushing sideways and it keeps dipping. The dollar has done pretty well against the yen. Now, they're going to raise our interest rates here soon. When they raise the interest rates, everybody should be buying the dollar. You should be selling the indices, but you should be buying the dollar. You got to understand how the fundamentals affect pricing, right? February 3rd, Great Britain raised their interest rate. You buy the pound. You buy it against a currency with lesser interest rates. Did y'all know that? If you didn't, you need to watch the ICT Market Maker series. Okay, I don't want to get off on a tangent. I mean, we were here to talk about order blocks. We talked about the order blocks. If you guys need further assistance, I'm always available to tap in with y'all, you know, on a one-on-one basis or whatever. But hopefully you guys got a pretty decent understanding of what the order blocks are and you know, how they move, how you can identify them and all that good stuff. You guys have any other questions pertaining to the order blocks?